You are watching a moment that will define financial history. Right now, as I speak to you, 3 of the most powerful institutions on planet Earth have just announced their exodus from China: JPMorgan, Goldman Sachs, and BlackRock. Together, they control more capital than most nations on Earth. And they are fleeing $4.5 trillion. That is the scale of the abandonment happening in real time. But here is what the mainstream media will not tell you. This is not a market correction. This is the beginning of the end of an era. This is the moment when the West finally realized that betting against reality is a losing proposition. Let me walk you through what actually happened, because the official story is a lie designed to keep you calm while your wealth is being transferred to those who understand what is coming. For 40 years, China has been the factory of the world. Western capital poured in like a tsunami. These banks didn't just have exposure to China, they were entangled with China. They had hundreds of billions in stakes, joint ventures, fund management, asset positions, all of it tied to the assumption that China would grow forever. That assumption has died. The property market collapsed. Growth slowed to a trickle. Capital started leaving, first slowly, then faster, then in a panic. The banks watched the math change in real time. They realized that every dollar they had in China was becoming toxic. The question was not whether to leave. The question was how to leave without admitting they had been wrong. So they did something brilliant and cynical all at once. They announced it would not look like fleeing. It would look like rebalancing, portfolio adjustments, risk management, strategic repositioning. All the words that make an exodus sound like prudent banking. But the numbers do not lie. $4.5 trillion in flows moving out of China in the first 7 months of 2025. That is not a market fluctuation. That is a statement flare announcing that the predators have finally abandoned their prey. Here is what JPMorgan said in October. We are not withdrawing from China. Our commitment remains strong. They said this while simultaneously preparing to move their capital out. This is not lying. This is the language of institutional power. When a bank says we are committed, what they mean is we are committed to protecting what we still have while we extract what we can. Daniel Pinto, the second most powerful man at JPMorgan, made a statement that revealed the depth of their panic. If U.S.-China relations were more favorable, our business size would have been several times larger. Translation: we want to invest more, but we cannot. We are trapped. The doors are closing and we are running out of time. Goldman Sachs made a similar statement. We are not exiting China. We are actively engaged. But here's the part they did not emphasize. They are no longer doing new deals. They are managing the decline. They are doing significant capital market transactions. But these are not new investments. These are the liquidation of old ones. They are turning assets into cash as fast as the market will allow. They are doing deals because the math of staying is worse than the math of leaving. BlackRock presents the most interesting case. Their China fund is up 22.51% year-to-date in 2025. The performance looks strong, but here's what you're not seeing. The fund is being wound down in slow motion. The allocation was increased from underweight to overweight in February. But this is not a sign of confidence. This is a desperation move. They are rotating into the fund to lock in investors. They are gathering capital under one roof so they can exit together. One coordinated move that looks like a market fluctuation rather than a retreat. The $4.5 trillion figure is crucial here. It represents the total two-way flows from China in the first 7 months of the year. Both inflows and outflows. This is not just banks leaving. This is Chinese capital fleeing China as well. The property market collapse has created a capital crisis within China itself. Chinese wealthy are moving their money out as fast as the government allows. Chinese state enterprises are reducing foreign exposure. The entire system is in capital contraction mode. But here's the brilliant part. The banks are using the Chinese capital flight as cover for their own retreat. When money is flowing out of China from all directions, when the entire system is contracting, 3 major Western banks can simply reduce their exposure and blame the market. They can say the flows are reversing, capital is reallocating, risk management dictates repositioning. And it all sounds reasonable, it all sounds prudent, it all sounds like sound banking. But what it really is the abandonment of a 40-year bet that China would grow forever. And now that bet is failing. The regulatory environment has become hostile. The U.S. Treasury has put restrictions in place. The CFIUS is scrutinizing every deal. The Senate Banking Committee has targeted 220 Chinese companies representing over $812 billion in capital. The days of easy investment in China are over. JPMorgan gained full control of China International Fund Management in March 2025. This looks like expansion, but it is actually consolidation. They are gathering their positions under one roof so they can manage the extraction more carefully. They are building a fortress around what they have left so they can defend it from further losses. This is not growth. This is survival. Goldman continues to do deals in 2025, but the deal flow is different. These are not new initiatives. These are existing positions being restructured. Capital markets, transactions, refinancings, rearrangements, all designed to convert illiquid assets into liquid cash, to turn paper profits into real money before the market realizes that the China bet has failed. The foreign direct investment into China tells the story clearly. Down 7.5% year over year through November 2025, down 10.4% in the first 9 months of the year to 80.89 billion. This is a structural decline. This is not a temporary pullback. This is the world waking up to the reality that China is no longer the place where capital goes to grow. The property market collapse has triggered a crisis of confidence that may never recover. The Chinese government is terrified. They are trying to hold the system together with stimulus measures, with monetary expansion, with price controls, with capital controls. But none of it is working because the problem is not economic. The problem is structural. Decades of investment in property speculation has crippled the productive economy. Decades of government intervention have favored certain industries at the expense of others. The entire system needs to be reset, and both the government and the market know it. The Federal Reserve is watching this carefully. The U.S. Treasury is watching it even more carefully. Because if China collapses, the implications are systemic. Trillions of dollars of Western capital is still in China. Trillions of dollars of global supply chains are still rooted in China. A sudden capital crisis in China would create shockwaves that would ripple through every market on Earth. This is why the banks are being so careful about their retreat. This is why JPMorgan says they are staying committed while they are quietly reducing exposure. This is why Goldman continues to do deals while they are carefully managing the decline. This is why BlackRock is gathering capital in consolidated funds while they prepare for the exit. They are trying to leave without triggering a panic. They are trying to reduce exposure without admitting the original thesis was wrong. They are trying to preserve credibility while protecting capital. But the market knows the truth. The market always knows the truth. Money is flowing out of China at accelerating speed. Capital is reallocating to India, to Vietnam, to Indonesia, to anywhere that is not China. The manufacturing relocation is accelerating. The supply chain diversification is becoming urgent. Companies are moving production to Southeast Asia because they understand what the banks are only now admitting. The China growth story is over. The implication of this is staggering. If 4.5 trillion in capital is moving out of China in 7 months, that trajectory will continue. Capital outflows at this rate will dry up available investment. They will force the Chinese government into even more desperate stimulus measures. They will create currency pressure. They will create inflation. They will force difficult economic choices that will further accelerate the deterioration. There are those who understand what is happening and are positioning accordingly. There are those who are caught off guard and will suffer tremendous losses. And there are those who refuse to believe it until their capital is already gone. The banks know, JPMorgan knows, Goldman Sachs knows, BlackRock knows. They are not abandoning China because they are emotional. They are abandoning China because the math no longer works, because the risk-reward calculation has fundamentally shifted, because 4 decades of assumed returns have evaporated in a market downturn that may never reverse. The moment we are in right now is the moment when capital recognizes reality. It is the moment when the illusion of infinite Chinese growth shatters. It is the moment when the largest institutions on Earth silently adjust their positions and pretend that nothing has changed. But everything has changed. And those who understand this change, who position themselves correctly, who see the world as it is rather than how they wish it to be, those people will survive the transition that is coming. Those who remain invested in the old assumptions will be crushed. The exodus has begun. The retreat from China is real. The question now is whether you will lead or follow.